In this session, we're going to talk about moving average crossover, specifically your very first trading bot, So we're going to talk about the first steps to get started. Number one is, of course, choose a platform. We'll go through all this here in just a couple minutes. Number two is connect to a broker. So you need some data feeds. You need some real-time rate quotes. So we'll talk about how that's done, and then we're going to set up our very first bot. A bot in this instance, a strategy, and a bot in NinjaTrader are pretty much interchangeable words. So we talk about a bot or two bots. We're talking about two strategies. We're talking about three bots. We're talking about three different strategies. So in this case, we'll get started with one just to start, and then we'll talk about the process or the checklist to go live. So in this case, you guys probably know we favor the NinjaTrader 8 platform. So that's what we're going to be downloading here in just a sec. And then we're going to go through and I'll show you how to set up the NinjaTrader 8 data feeds. They do offer a 14-day free trial. Again, no credit card required. So that allows you to get in and to kind of play around without any upfront costs. And then, of course, I'll show you how to use the sample moving average crossover that is built in to NinjaTrader 8. So let's go ahead and get started. So first thing we want to do is we want to launch a browser. I really like Google Chrome. And what you want to do is go to account.ninjatrader.com/register. And so that's the very first step. Again, open your browser and point it to this address. I will put this in the comments so you can copy and paste this. Again, it's the account.ninjatrader.com/register. And in the top right here, you can go ahead and plug in an email address, something you want to use. If you don't already have a NinjaTrader account, it will ask you to confirm your address. It's going to look something like this. I'm going to click confirm. And I'm going to go ahead and set up a username and password, check that box and click create user. So let's go ahead and do that now. I'm going to go ahead and save that. I'm going to open account. Oops, actually, rather do not click on that button. Go right here, not ready for live trading. And then you're going to enter your information here. Click continue. And boom, now I'm set up with a demo account. Now at this point, I have not yet even I have not entered a credit card. I've not done anything other than enter some basic information and my email address. Keep in mind, if you get to the place where it's asking you to make a deposit or ask for a credit card, you went too far. Now keep in mind that NinjaTrader is two things. It's a platform and a broker. In this case, we just want to set up the platform and use their 14-day free trial, their data feeds, just for 14 days. Again, no credit card required during that 14-day trial, but we're going to tap into some of the free stuff they offer at the beginning so you can get started without using any upfront money. No upfront cost. And you'll see here I have a demo sim account set up and running. It's showing $50,000 of equity, kind of a practice account. So that is great. That is awesome. The next thing you're going to want to do is go down here into the bottom left and you want to click download. Go ahead and download NinjaTrader. So I'm going to go ahead and click that. We're going to click download here. This big blue button, and we're going to let that download. I'm going to go ahead and open up a Windows Explorer window, and you'll see right there is my thing. I'm going to double click on that, and that's going to go ahead and launch the install. Now, I actually have NinjaTrader already set up and running, but that should give you a step-by-step menu, like a wizard to go ahead and set up and install it. Go ahead and click the next button and follow those prompts, and you'll have it installed. And you will, there we go, ready to go. Okay, so the next thing we want to do is we want to go ahead and launch NinjaTrader, and we're going to go ahead and open that up the very first time. And it's going to ask you to log in. Now, remember, we specified the username and password just a couple steps back. and we want to go ahead and log in and do that here. Go ahead and log in with the username and password or email address that we previously specified. There we go. So it's going to launch the very first time. Now I do have this previously installed, so this will look a little different for you than it does for me. But the main thing you want to know about is this main window here. This is considered your control panel, control center. Everything launches from here. So the first thing you're going to want to do is go up to tools and then options, and you'll see that we have the general tab selected on the left. And what you want to do is make sure that this multi-provider here is checked. If not, go ahead and check that and then click OK. Click OK. And so then what you'll do is you go up here to your connections and you'll go to configure. And in this case, you will double click on NinjaTrader in the top left. So you're going to double click NinjaTrader and it'll basically kind of take it. And in my case, it'll add it down here. And this is where we're going to specify that username and password that we previously created and specified just a few steps back. And we're going to go ahead and check connect on startup. And what that will do is that will go ahead and create an account for us. It'll connect the NinjaTrader account to our NinjaTrader software. And that will basically give us a way to run backtest, some real data to play with in our very first example. So I'm going to go ahead and specify that here based on what I had previously specified. Okay, now that I've done that, I want to go back down here to connections, and you'll see that my NinjaTrader is what I previously specified. And there we go. We got you'll notice down here in the bottom left, we got a green light, meaning we are connected to at least one data source. In this case, I have a few accounts that I use. So in this case, we're connected to that my NinjaTrader. If you ever want to disconnect, obviously you click that button. If you want to reconnect, you disconnect and then reconnect again. Pretty straightforward. Okay, so the next thing we want to do is we want to go to new, and then we want to go down here to strategy analyzer. Again, in this case, a bot is considered a strategy. This is a bot analyzer, a strategy analyzer. We're going to click on that, and this will load up here at the top. And what we're going to do is we're going to pick, I have some things that my company's built, some different bots. So we're going to go to the built-in one here, the sample MA crossover. And what I want you to do is we're going to run through the exact steps that I ran to kind of come up with this. And so the first thing we're going to do is we have two different moving averages. And we'll talk about that a little bit more in a second, but there's basically a fast and a slow moving average. That's how you get a moving average crossover, which is basically this exact strategy. The sample MA refers to moving average. So it's a sample moving average crossover and is built into NinjaTrader. This is not our technology. This is built into the core of NinjaTrader. So we're going to go ahead and enter a 7 and a 16. I'll tell you in a sec why I chose that. Under data instruments, we're going to pick M and Q. If you have December or whatever the most recent contract month would be. And then for the value, we're going to type 75. So we're going to run this on a 75-minute chart. And I'll show you why here in a few minutes, how I actually arrived at that. But what we're going to do is we're going to go to our start date. And I'm going to pick July 17th. And we're going to go through the end of October. And today is actually the 27th. Actually, let's go through the end of the 25th. So we're going to do July 15th through October 25th, kind of like a roughly what is that, about 12, 13, 14 weeks, something like that. 14-week time frame, a testing period is what we refer to that as. And our maximum look back, we're going to say infinite bars required to trade is 2. And for our order resolution, let's leave it a high 1 minute. And we're going to leave everything else pretty much as is and click run. Now, in this case, it is connected to our data. And you'll see here that we actually got our very first back test. Okay. And this is showing our long trades, this is showing our short trades, and this is basically all of them. So if you take your long plus your short trades, that will give you all of your trades. And a few things I want you guys just to notice here on the screen is, number one, we did take $15,000 worth of profit, but we lost $7,000, right? You have to take some losses, which means we were left with a net of $8,400. Okay. Now, keep in mind, this does have just a less than 50% win rate, which is okay. It's not amazing, but it's okay. But even with below 50% win rate, you'll see here that you can still make some decent money. And by the way, it took 95 trades. Okay. Now you'll see our average trade, we made $88. Now there's a lot of stuff we can go through here. We're just going to fly through a few things. One is when you click on the top here, the summary, change it to analysis, you'll be able to see kind of that bottom left, top right, kind of that slow and steady growth. But you'll also notice that there are some times where it ticks backwards, which means you have a couple losses in a row. It's not a big deal. It is part of trading. If you are taking financial risks, sometimes it just doesn't work out. But this will actually show you a list of all of the, show you multiple trades, all the trades that were taken. And you can see that a little easier when you click on the trades tab. And you'll see here the profit here. And you'll see sometimes if we were to sort this based, here we go, you'll see our cumulative. Sometimes we turn from a positive balance down to negative, back to positive, and then negative. And then from then on out, you'll see that we pretty much remain positive. And keep in mind, this is the per trade. This is what we made per trade, $81, and we lost a few, then we won, right? And you'll see, remember, it's about 47% win rate, which means about half of these we're going to lose. But when we win, we make some decent money. When we lose small. And the way that this works is this column here is our cumulative net, basically like our running balance, all of our wins, our losses collectively. So when we win our very first trade, we have an 1850 balance. Then we lose 18 and we're back to 50-cent balance. Then we lose 122. Now we're in the negative. And you'll see that over time, again, if you're patient, you let it run, and you don't try to interfere and try to micromanage, you'll see how this kind of works. And then we end up with that $8,406 balance down here once it does finally complete. Now, some of you guys might not be used to this. And what this is this is a backtest report. There's lots of stuff you can look at here. You can look at the trades that it took, all the trades that it took over the, 14-week time frame. You'll see where it got in, got out, it exited, it got in again, exited, right? Wins, losses, all that. You can see all that here. But what I want you guys to do is I want you guys to go down here to the bottom under template, and I want you to click save. And what we're going to do is we're going to create a template, and the template is basically going to take all these settings here on the right, and we're going to kind of save them in like a settings file. And I like to name these, so I call it the MA crossover. Again, this is the name of the strategy, the moving average crossover. And we're using our 7 and 16 on MNQ is the instrument we're trading. And I'm going to go ahead and type 75M, 75-minute chart, and save that. And so what this is going to do is it's going to save this template. And when we go live, we're going to use the settings that we were looking at right now to go live with these exact settings. And it'll make it way easier. So the next thing we're going to do once we're okay with this, you guys are able to export this. This has tons of stats and information here. Some of you may notice, hey, Matt, this actually looks like it wins more on the long and loses more on the short. That is true in this exact example, but you kind of want something that can trade both long and short, both bullish and bearish. Given market conditions, sometimes it may be more bullish than bearish. Sometimes it might be more bullish than, or vice versa, bearish than bullish. And the idea here is you want to be able to go either direction. You want to be market neutral. That is my preferred posture. Why? Well, even though we lost, we won more percentage-wise. If you look at the dollar amount, they both kind of almost evenly contributed $4,000 and change to our overall net profit here. So again, you don't want to say, I only want to go one direction or the other, because as you guys know, things happen, especially with interest rates. We're in a presidential election cycle, right? Interest rates, inflation, all kinds of things are at play. The world's kind of a crazy time right now. And so we don't want to say bullish only, long only. We don't ever want to say bearish or short only, because there'll be a time where we'll be missing out. Right? And we don't really know when that will be ahead of time. So we kind of like to play both directions. Now, the advantage of playing long and short, bearish and bullish is what? Well, you can make money in either direction. When things go up or down, you can make money in either direction. The catch is you can also lose money in both directions if you're on the wrong side of it. So what we're going to do again is go down here to template, go save, and you'll see the naming convention here. I'm going to remove this duplicate one. And this is my naming convention, MA crossover 716. MNQ is the micro NASDAQ contract. It's the micro NASDAQ futures contract, 75 minutes. Don't worry about, we'll talk more about the details of this back test, how I arrived at these settings, but I want to give you some steps on how to go live pretty quickly without tons and tons of extra pause, right? We're going to get right into the meat. Okay, I'm happy with this. So what I'm going to do is we'll talk more about how I would improve this, but let's just go ahead and go live with this very first example. And what we're going to do now is we're going to go to new, and then up here at the top, we're going to go to chart, a new chart. And the top left here, we're going to pick MNQ, and I like, we're looking at the December contract. MNQ, this does cycle through. We had July is over, September is over. Now we're looking at the December contract. And then on the right here, you'll see that you're able to specify a time frame. What I want to do is I want to look at a 75-minute chart. I want to go back 45 days. Okay. So what this means is I'm going to click OK. And what I'm going to do is I'm going to go into this chart and we're going to add some moving averages. So you click on this icon here, it says indicators. It's the third from the right. And we're going to go in here. We're going to look for the simple moving average, the SMA. We're going to double click on that. And what I'm going to do real quick is delete the EMA. We're going to remove that and we're going to use the SMA. We're going to add a second SMA. So in this case, we're going to double click one more time. We're going to make this a 16. And we're going to change this from a goldenrod color. We're going to make this 16 is going to be red. So we have two SMAs over here on the left. One is a 7 and one is a 16. The 16 will be red and the 7 will be green. So we're going to change goldenrod to sea green. Click apply, click OK. And what you'll notice is this is actually how this strategy works. Is as we are trending and our green line is above, if we're trending bullish right here in this cross, we're going to get into a trade, okay? And it's going to stay in the trade as long as we're continuing to trend and the green line is above the red. Now, as soon as it switches, it's going to exit and then get short. And then once it switches again, it's going to exit and then get long again, then exit, then get short. Now, the Achilles heel, the gotcha of this strategy is if it chops around too much, bullish, bearish, up and down, kind of going sideways, you're going to take some losses and you're basically going to give back some gains. Now, most people say, how can I avoid that? I've been doing this a few years and I haven't yet found a simple way to avoid it. You can, of course, minimize it, but the trade-off is you're going to get back some profits on your way to try to minimize that because you don't really ever know when it's going to actually take a nice move higher or lower. And it ends up being kind of like a wave. If any of you guys have taken surfing lessons, you kind of want to be out in front of the wave before it fully forms so you can take that nice ride, get a nice little 30-second, 45-second, maybe a minute ride out of it. In this case, as you all know, we're looking at a 75-minute chart. So each one of these candles lasts 75 minutes. So that's an hour and 15 minutes, right? So this is many, many hours of being in the trade. And as you guys can see across the bottom here, this is October 9, October 10, 11, right? So these are all full days. So the difference between these candles here basically represent a full trading day. And as long as we're trending up, trending higher, we're going to stay in the trade. If it ever starts like right here, you'll see where it crosses and then goes lower. As long as it's trending lower where my red line is above the green, it's going to get short and then it's going to exit kind of right there. It's going to flip bullish, then bearish, and kind of chop around a little bit. And it will make some gains along the way. From here to here is a small gain, right? It obviously should have exited up here, but how would you know that's the, the absolute high? You really don't know. And so what this is, again, we're looking at this average, simple moving average crossover of a 7 and a 16 moving average. So the 7 is what's called a fast moving average, and then the 16 is the slow. This is basically my green. 7 is my green, and 16 is my red. And so you guys can see, we'll go back into our back test here in just a second. You'll be able to see exactly how that plays out, and we'll be able to look at some of the actual trades. And when we go look at you'll see that this is pretty much hard-coded to trade one exact contract, and we're trading MNQ. which is the micro NASDAQ futures contract. So M&Q for December in this case. This does have built-in rollover strategy. So if you're using July, this summer, or September or December, it will auto cycle through. And what you'll notice is that we do take some losses along the way, but then we also get some nice wins, and a lot of times it'll chop around a little bit. Now this first column, or this column right here, is our profit, basically meaning per trade, how much was my profit. And then this right here is our cumulative running average. It's basically our kind of our combined, all the wins, all the losses, kind of like a checkbook register. It kind of adds everything up, and you'll see that over time, it does chop around a little bit, being profitable, losing, giving back some. It happens. Some people say it should never have more than X number of losses in a row. Just because it has 4 losses in a row, then a win, you kind of win all that back and then some, then a couple more losses, then a couple more wins. There's nothing inherently abnormal with this exact back test. And as we go lower, you'll see that we do have some more wins, some losses. We do have, it's all part of it, right? So you have 1, 2, 3, 4, 5 losses in a row. And then you have 2 wins right here that obviously make up more than the sum of these losses here. These are small wins, small losses. And that's kind of what we refer to as the chop, where it's just chopping around. You're giving back some gains, but obviously if you sit still, let it run, it will continue to work in your favor. And then as you guys can see here, as we go, as we continue down, we do hit this point right here where it's $8,190. So it's kind of like the high point in the account. Then we have some losses, then a couple wins, then a couple more losses. And then we end up at the end of our test period here around $8,400. Now this is a back test, and we are taking about 95 trades. If we were to pop back over to our summary, you'll see here, of course, 8,400 and our profit factor of about 2.19. Now, for all intents and purposes, this sample strategy does not have all the normal risk calculations and the basic stuff that we typically would look for, but this is a built-in sample moving average crossover strategy that you're able to tap into without, to kind of get started for free. And this does not have quite the 50% win rate, but even with a 47% win rate, you're still banking some wins, which means your wins end up being bigger than your losses, right? So if we're again to review our gross profit, 15,480 divided by 7,000, and that's how we get that ratio of our profit factor, which basically means when we win, how much do we win? When we lose, how much do we lose? And that's important to know, so you can kind of set your expectations. As you go through this, you'll see your maximum consecutive winners is 6 wins in a row, 5 losses in a row. Your biggest winning trade is $1,224, and your biggest losing trade, largest losing trade, $675, so about half, right? So I like those ratios. I like that. Obviously, ideally, you'd have a little bit higher percentage profitable, but in this case, we're not actually controlling any risk. All we're doing is we're always trading one contract. So when you look at the contracts here, we're always trading one contract. Well, how can I make it do 2? Well, over here in our back test in the bottom right here, you'll see that we have a default quantity of 1. Now you can make that always use the strategies, computations, but in this case, if you wanted to make it 2 and we were to rerun this, let's go back to the summary and clear that, and let's rerun. You'll see everything's going to double, right? My profits are doubling, my losses, everything's going to pretty much double. So now I'm trading 2 contracts. Now, yeah, you can say, okay, what happens if I'm trading 20? Obviously, you can't get carried away. If you are using something like a funded account, you do have a limit or a maximum number of drawdown that you're able to abide by, rules you have to follow, right? And again, 47% profitable is not amazing, but you can see even with like a flip of a coin, even with 50-50 odds, heads or tails, win or lose, you'll see that even then you can still make some decent profits, right? So even if the strategy, even when you win more than you lose, it could still be a profitable strategy, even with 50-50 odds. Now, this does show that that the average time and market is 400, kind of in the trade, so to speak, is 499, let's see, 499 bars, or sorry, 499 minutes. So it's about 6.4, 6.5 bars or candles. Remember, we are trading on a 75-minute chart. So each bar represents 75 minutes. Okay. Now, if I wanted to look at the actual trades, if I wanted to look at them actually on the chart, you'll see it does get a little crazy, right? And you'll see here where our moving averages cross. It's getting into the trade at the close of that candle. It's exiting here at the end of the session, exit on the session close, which basically means when the futures market closes, we're going to go back to cash, and it's basically going to cycle through. So this, even though this is kind of like a swing trading strategy per se, it's always going to exit at the end of the day. And sometimes it might take multiple trades per day. If we were to look at our list of trades here, you'll see there's many days where we have multiple trades per day, right? And sometimes we might miss a trade. There might be a day where we have no trade, and that's okay, right? So we have multiple trades here on the 19th of July. Here we have a couple on the 18th, a couple more here on the 16th of July, a couple on the 15th. And then here we have a couple on the 20th, right? And so as we go through all of these trades, it looks like one to maybe slightly more every day. Only when it gets a signal though, right? Only when it gets a signal to get in, you get out when the trend reverses. Now, the good thing about this trend following moving average strategy is as long as you're winning, it's going to stay in the trade, right? As long as you're winning. And the only time it's going to exit is if the end of session happens, meaning the close of the futures market, which is 4 p.m. Eastern, right? Kind of when the stock market closes, or if our moving averages flip from bullish to bearish or vice versa. And again, in this case, these are pretty amazing. Even if you go back to one contract, pretty amazing returns. And think about this, we're only going back about 3 months, right? So even if you're like, Matt, $8,000, that's not enough for 3 months worth of work. Well, keep in mind, this is a side hustle. You're not sitting here watching this. You're just letting it do its thing. You're letting it execute the trades. And again, it's going to cash at the end of the day, and it's kind of getting back in the next day. Now, for those of you who work a full-time job, guess what? You can keep your full-time job. Nothing has to change. You can just run this on the side. Now, as you gain some confidence and get some experience, of course, with real money or even with funded accounts, you can increase your contract size from 1 to 2 to 3 to 4 over time, and then you can scale into bigger and bigger profits. But you also have to have the skill level and the stomach to let it run, which means don't interfere. Just let it do its thing. A lot of times people want to interfere. They want to exit early. They want to tighten up stops. In this case, there are no stops, but you will be long or short regardless at any point because you're going bullish and bearish, bullish and bearish. And as long as it's trending one way or another, you will be profitable. Okay. And this is similar to the strategy that I used to teach at a former company that I used to be a part of called Momo is a momentum or trend following strategy. As long as it's winning, it's going to stay in the trade. And as long as if it's losing, it's going to exit and switch directions. And again, as you guys can probably imagine, the good thing about being able to trade in both directions, you can win both directions. The downside is you can also lose bullish, bearish. You'll see here we're buying, we're selling short, we're buying, we're selling short, right? And so it's long, it's short, it's trading both directions, but again, it can win both directions and it can also lose in both directions. If you look at the summary here, you'll see that the long trades in this example during this test period tends to win more than the short trades. But even though these tended to lose, not win as much, the dollar amount contribution of about 44,000, 4,100, 4,200 each basically contributed almost equally to our total net gains, right? So the long trades were a little bit more consistent, but we had bigger wins over here with the $1,200 win against the $438 loss. These are more evenly kind of spaced out. And what I'm going to do is I'm going to go in here and we're going to add some moving averages. Now, the moving averages do not need to be on there, but I want you guys to look at what they are and how they work. Okay. So the first thing I'm going to do is I'm going to go up here to this. It looks like a little, well, you mouse over, it's a third from the right, indicators. And I'm going to, on the top, I'm going to start, just hit the E button and go right to EMA, and I'm going to add it. Now, remember, in this case, we're using two EMAs. One is a 7, and the other was I think it was a 16. Yep. So I'm going to make my 7. I'm going to make this is considered the fast moving average. We're going to make this one green. Now let's go up here to green, click apply. And my other one, I'm going to turn this from goldenrod to red. And so we'll make this 16. Click apply. And you'll see here I have a 7 and a 16. Okay. Now the volume isn't necessary. It's on the default of my charts. We're going to click OK. And you'll see here we got these red and green lines that crisscross. And the way that this strategy works is we're going to get in bullish when the lines cross. We're going to get out bearish when they cross the other way, right? So you're looking at the green line is above. That means we're going to be bullish. When the red line is above, that means we're going to be bearish. Again, all we're doing is we're kind of following the trend. And over our testing period, remember, we're looking at this for 14 weeks. And you guys can see, because each candle represents 75 minutes, we're going to be in these trades for quite some time, right? And you'll see the different days kind of across the bottom of the screen. So this little area here represents about a week worth of trading, right? So it might not take a trade every nanosecond, but sometimes when it's winning, it's going to stay in the trade. When it's losing, it's going to get out and switch. So that is the basics of how moving average or trend following typically works. So to go live, the next step we're going to do is we're going to click on this little clipboard icon here that says strategies. We're going to click on that. We're going to pick our sample MA crossover. So we're going to enable that, double click on that. And then at the bottom right here, you'll see template. We're going to click load, and we're going to go pick what we just had saved for our settings. We're going to click load, and you'll see where it says 716 on a 75-minute chart on MNQ. And we're going to click apply and OK. Now you will notice here that we are trading this in a practice sim account. This is not real money. This is practice. I want you guys to see how this works. And we're going to click OK. Now, what you'll notice when you're moving the chart around is in the top right, there's this little arrow. You click on that to go to the most recent time. Now I'm recording this when the market is open. It is the weekend. This is Sunday evening, so the Monday session is just open, but you'll see it's not really moving much right now at this exact moment, which is fine. But the next thing that's going to happen when if I leave this running on my laptop, plugged in and powered on, of course, there are a couple dependencies we need to talk about in a sec. But the next thing I'm waiting for is one of these lines to crisscross, and then I'll be getting into a trade. It's currently would normally be in a trade, but since I just started that, we're not in any exact trades here. The power of this is that you're able to take a strategy, you're able to see an actual report with dozens of statistics that tell you how well this strategy works. And that's before you ever get into real money, before you can, like when I jump into a new strategy, I want to know how well it works. I don't want to just, look at two examples that happen to both work. I'm going to see when it works, when it doesn't work. I want to know all the things, just like most of you. And the main thing I really like is I like profit factor above 2. So profit factor greater than 2. In this case, you'll see 2.19. And we'll talk more about the significance of the back test in our next session. And as we wrap up, here is a quick recap of what we've spoken about so far in this session. Number one, I did show you how to download and install NinjaTrader 8. That's the platform we use, how to do that for free. We talked about how to connect the NinjaTrader 8 login, how to get that username and password you specified and plug it into the software itself. We are using the built-in sample moving average crossover strategy. And then we did run a quick back test so you can see what that looks like. And then we saved those templates, saved the template settings, and then we went ahead and went live. And so going forward, of course, the bot does require the internet to be available. So if you lose internet, the connection between your laptop or your desktop, and NinjaTrader will be broken, right? It does require power. So if you're on a laptop and you shut it down, that's going to be a problem because the communication is broken. So it does require a few things. Of course, you have to be logged into your account still. And that's basically how you go live with your very first trading bot. Now, in our next video, we're going to start and we're going to do a deeper dive on getting started with your first back test. I did show you how I did. I'm going to show you how you can do it and run your own back test in our backtesting 101 session. Stay tuned for the next video. Thanks.